So here is the debt structure for Monsanto, and this is what I mean by debt structure. Instead of just looking at the total amount of debt that a company has, right? In the case of Monsanto, it's $10.5 billion. What we're going to look at is what type of debt does a company have? In this case, right, I listed here all the different types of debt securities that Monsanto had issued at that time. This is essentially September 2016, is the same time period we're looking at in the previous example, right? So you can see that there is commercial paper, revolving credit, term loans. So the purpose of this lecture is for us to learn what's the difference between all these different types of debt and how companies choose between these different types of debt securities. The idea is that debt has many faces, so debt is not going to come only on one mask. There's going to be many different types of debt. Let's talk about these 5 types: commercial paper, revolving credit, term loans, bonds, and capital leases. Starting with commercial paper, if you look at that table I showed you, for Monsanto, commercial paper represents 18.3% of the total debt that the company has. So what's the characteristic of commercial paper? Commercial paper is a short-term debt that the maturity is less than 270 days, so even less than a year. It's sold directly to the market. So if a company has commercial paper, you're not really borrowing from a bank. You're borrowing money directly from investors in the market. There is no intermediary. Okay? And because of this characteristic, this is a type of debt that is relevant only for firms that have very high credit ratings. To be able to access this market where you can freely borrow from investors on a short-term basis without an intermediary, what happens is that this market is really only available for companies that have high credit ratings. Like Monsanto, for example, had a BBB credit rating. It can have some commercial paper. But companies that have lower ratings or companies that don't have credit ratings are not going to be able to access this market. If we look at the data, what I did is I pulled out from the financial statistics of the United States how much commercial paper was outstanding for the non-financial corporate sector at the end of 2015, and the figure was $176.5 billion. That might seem like a lot, but you'll see that it's a small market compared to bonds and bank loans. Okay? Let me also say that if you had obtained this data for financial companies, you would see larger numbers. Financial companies like banks and insurance companies, they rely more on commercial paper, but non-financial companies do not rely so much on this specific market. Then in that example, in the Monsanto data, we have revolving credit. And we talked about this in Corporate Finance 1 already. Revolving credit, it comes from a credit line. It's a bank loan that originates from a credit line drawdown. Okay? That data shows us that Monsanto has an undrawn credit line of $1 billion, $1.074 billion, but the revolving credit is actually 0. And here's the question I want you to think about. We talked about it in Corporate Finance 1. I want you to refresh your memory. Why would Monsanto have a credit line if it does not use it? The credit line is going to cost money, and Monsanto is not using it. What's going on? The answer is that the credit line is used mostly for insurance in this case. Okay? The idea is that Monsanto is going to draw on the credit line if it has trouble refinancing its other liabilities. For example, in Corporate Finance 1, we gave an example of accounts payable. If a company has trouble refinancing accounts payable, it may be useful to have a credit line that you can use to manage your liquidity. Or Monsanto may have trouble refinancing commercial paper, right? We showed that Monsanto does use commercial paper market. If you have trouble refinancing your commercial paper, it might be useful to have a credit line that you can use as a backup. So it makes sense, actually, that you have a credit line but you don't use it if you're using it for insurance, right? If you had drawn the whole thing, then it can no longer be used for insurance. What you see in the data is that companies like Monsanto that have a high credit rating are going to have undrawn credit lines that they use for insurance purposes. Moving down that table, we have the term loans. So a term loan is a bank loan that does not originate from a credit line drawdown. So it's a loan that it's money you borrow from the bank with a fixed maturity. That's why it's called term. And it does not originate from a credit line drawdown. Otherwise, it would be called revolving credit. Okay? It can be short or long term. And for Monsanto, it wasn't a very important form of financing. Monsanto uses only 3%. Only 3% of the total debt was coming from term loans. Essentially, what Monsanto is doing is using bonds for its financing. So 79% of the debt that Monsanto has comes from bonds that Monsanto issues in the financial markets. Like the bond we were talking about. Remember that I gave an example of a specific Monsanto bond. That is how the company is financing itself long term. Rather than bank loans, they are using bonds. Okay? Finally, we have capital leases. What is a capital lease? You can think of this essentially as renting, right? Instead of buying equipment, buying a machine, and borrowing money to buy the machine, what a company can do is to rent the machine. This rental is going to generate a liability, right? So if you have a lease, you're going to have to make the rental payment to the other party in this transaction, right? So this capital lease that you see in Monsanto's balance sheet is a lease that cannot be canceled, right? The lessee is the company who rents the equipment, right? So we call the lease a capital lease if the lease cannot be canceled before the end of the contract. So it has this liability component, right? So if you have this lease, you have to make the rental payment. However, for Monsanto, if you look at the data, Monsanto actually didn't have any leases, right? Capital leases are only going to be important in certain industries like airlines. Here you have JetBlue. Let's look at JetBlue debt structure as another example. And it's very similar to Monsanto's in many ways. So for example, it's most of the debt that JetBlue has comes from bonds. It doesn't really rely on bank loans that much. It has zero revolving credit, right? But it has a credit line here, undrawn credit line of 600 million, so similar, right? The main difference here is that JetBlue does use leases. So 8% of the total debt that JetBlue has corresponds to leasing, right? So essentially, airlines are going to lease. They use the leasing market to rent airplanes instead of borrowing money and buying airplanes. Airlines are also renting airplanes, and you can see that in the balance sheet of JetBlue.